All right, what's going on? What's going on? What's good, guys? Your boy, Mr. Locario, Miles Cunningham in the building. We got some special guests in the building. We have Rashidi Locario and Kaylee Smith from RKT Appraisals, and we about to talk about some life insurance game, man. You know, last week we was talking about the credit. Today we're gonna be talking about the life insurance and all that other stuff. So, again, you guys can introduce yourself and let people know about your company and all that other stuff. So, yeah, go ahead. Or any y'all can go first.
My name is Kaylee Smith, one of the co-founders of RKT Appraisals, right? And we're gonna talk about some life insurance. Now, before we talk about money first, right? And how it works. At the end of the day, no matter how much money people get, if you don't know what to do with it, then it's just as bad as if you didn't have it at all, right? So what we do as a company at RKT, first thing we do is we educate families on financial literacy, how money works, where to save it, how to invest it, right? How interest works, how interest will affect your purchases. We talk about inflation, things of that nature, right? And what we do for our clients is that we give our clients a list of options. We're very big on that. We give them a list of options. Just like when you go to a regular store, anywhere you go, you want to always have options before you purchase something. We give our clients options to where find the best solution that best suits them. Just like it's almost like I want you to think about it like Foot Action or Foot Locker, right? Genius for what they did. Let me ask you guys a question. Have you ever bought a Foot Action?
Wait, hold on, you breaking up a little bit. See, can y'all hear me? Because I think it's breaking up a little bit.
Yeah, he's breaking up.
Can you hear me now?
Okay, I can hear you.
All right, go ahead.
I think it's breaking up. I think are you on your phone, Kayleen? Are you on your phone?
Sneaker?
Hold on, Kayleen. Are you on your phone?
No, I'm on my laptop.
Okay, you on your laptop?
No, I'm on my laptop.
Okay, cool. But is there a way? Can you on your laptop do the thing where you stop the camera? Maybe that's gonna make it easier. Just do this like here, where you stop the camera and you just do audio. It should have a thing that says
let me see.
Cam and stop cam. Yeah, there we go. Okay, so now talk.
And how now?
I think that's a little bit better. Let's try that for a second.
How do I sound now?
Yeah,
go ahead.
Still sound muffled?
No, yeah, you good. Go ahead.
I'll sound a little better?
Yeah, you sound better. Go ahead.
I was saying, let me ask you guys a question. Have you guys ever bought a sneaker?
Oh, damn.
The sneaker?
I can't hear what you're saying. The internet's going kind of slow, bro. It's going kind of slow.
Oh, wow.
All right, go again.
Should I try to go back on my phone?
Yeah, try.
Can you hear me now?
Yeah, I can hear you now.
Yes,
go ahead.
No?
No, I can hear you now. Go ahead.
Okay. So basically, the point that I was trying to make, right, is that just like Foot Action and Foot Locker, right, you don't necessarily buy a Foot Action or Foot Locker sneaker, right? You buy that Foot Action and Foot Locker sell, like Nikes, Adidas, Reeboks, right?
Right.
And same thing with us. We don't. What we do is we don't have an actual product, right? We work with many different financial firms to help our clients find the best solution that best suits them.
Right.
So that's basically what we do. That's the main thing that we do, right? And we do the life insurance. And are you guys familiar about how life insurance works?
Yeah, so that's what I want to get into now. So what
are you guys
actually
familiar with how life insurance works?
Yeah, I want to get into that. So I want to know what actually is life insurance, because a person might, remember this people, they're like, what the fuck is that? What actually is life insurance? What does that do? Why do I need it? What is the point of that? So let people know what life insurance is.
Okay. So life insurance is basically a plan to protect your family, right? When a person passes away, that loved one that passes away, their family gets the proceeds. In the layman's terms, that's pretty much what life insurance is, right? Why is it important? For one, to protect your family. Like it's a lot going on in this world, and you'll be surprised who doesn't have protection. Right. So we lead with that, because if we could help people in this one area, most of their problems will go away. Now, it's bad enough that when somebody passes away, and it's not cute that somebody has a GoFundMe page, things of that nature. Why? Because they failed to plan. They didn't put the right type of things in place to make sure that their family was okay. So what we do is that we make sure that families are properly protected through the life insurance. There's different types of life insurance that we offer, different types of products. Most people they're used to term, right? A lot of people got term. When I ask somebody, are you protected? Are you and your family okay? And they say, oh yeah, I got a term and on my job. Anything wrong with having a term policy? Term policy is it's not the only thing that we have to offer. And then when you have a policy through your job, if you quit or you get fired, you get furloughed, then that life insurance doesn't go with you. It stays where it's at. And a lot of people don't understand that. So I tell people, even if you do have life insurance, make sure you have a outside source versus just through your job.
Okay. And so Rashidi, let me ask you a question. So if a person comes, Kelly, can you hear me? Kelly, can you hear me?
I can hear you. Can you hear me?
Kaylin, can you hear me?
I can hear you. Can you hear me?
Okay, because I was going to ask Rashidi's son. Okay, I was going to ask Rashidi's son. So Rashidi, I wanted to ask you, if let's say a person is, they're, what age group or age range is, where a person should get life insurance? Like, so let's say somebody's 21, is that the right age, or should they wait till they get older? Like, what's the age for that to happen?
Well, that's a great question. To be honest with you, every age. The reason being, when it comes to life insurance, like Kenny was saying before, it protects your life. So the reason a young kid, a person that's 18, 19, 20, to have a life insurance policy, and honestly, it's actually good to even get a life insurance policy as soon as you have kids. The reason being is that the younger you are, the less likely that, you're going to get hurt or you're going to die from certain ailments. You're going to come up with any diseases, diabetes, things like that. So you can have life insurance as soon as you get out of the womb, in all seriousness. And the reason why it's great to have life insurance, even to start off with at a young age, is that it'll be dirt cheap. And that can be an investment product. What do I mean by that? Literally, you come out, you're a 7, 8-year-old. For example, my son, he's 10. He has a life insurance policy. He has 2 life insurance policies. They're called whole life insurance policies. So, they sit at a value currently at $200,000 if something were to happen to him. People get nervous off top. Oh my God, why would you get a life insurance policy on your kid? But it's an investment tool. Reason being is that, God forbid, if something were to happen, he's covered, funeral costs is covered. But more importantly, reason why there's no age limit on why to get a life insurance policy is that product, because it grows just like stocks, when you get an IUL life insurance policy, you can borrow from that policy. By the time my son hits 18, between the both policies I have him right now, he can borrow up to $40,000 from those policies. So when it comes time for college, you don't got to worry about, damn, I'm going to get the money to pay for his tuition. He need books. He might need a new car. You could borrow from that same life insurance policy. My son can then make the decision when he get 18 to take over the payments. It's dirt cheap because he hasn't developed, God forbid, any type of, like I said, high blood pressure, diabetes, anything, or just come across a severe accident. And he could take over that policy, and he doesn't necessarily have to get a new policy for himself, or he could add on to that. Now, to go back to someone, like a question where someone 2021, that's a perfect investment tool. Why? Someone fresh 18, they get a life insurance policy, again, can be used as an investment tool. They go ahead, get a policy, say it's a policy, it can be dirt cheap, maybe something like $15, $20 a month. And within the first couple years, they could borrow a couple thousand, depending on the type of policy that they have. They use that for books, whatever they need to use for it. And again, it's perfect because you don't really catch no diseases, diabetes, all everything and above during those ages. And so the rate is dirt cheap. It's not taxed, and you can borrow from it when you need it for life. And the good thing about it is if you do borrow from it, you only pay yourself back. So you can't really knock it. So honestly, the earlier the better to get a life insurance policy, but doesn't matter what age you're at. You definitely want to get it before you start getting upward of the 40s and 50s. But the point is, there's no limit, no wrong time to get a life insurance policy. In fact, the younger you are, the better, because it's cheaper, it saves you more money, it locks you in just in case down the line you come up with an ailment, diabetes, your rate goes up. It's all about cost and saving money. So again, there's no wrong age to really get life insurance at all.
Okay. And so how does it work specifically as far as like, does it like how much does it cost to, you know what I'm saying, to for the life insurance? Is it like money that you're just putting away? Like how does it all work? So like for someone who's just like, I don't even know what this is. Like where does the money come from? Is it just like you take a portion of your paycheck and give it to the life insurance? Like how does that work?
Yeah, so you have all that options. So say somebody wants a life insurance policy. All they do is we go through, me and Kenny will sit down and do an application. We go over all their health questions from top to bottom, age, all of that plays a factor in the rate. So they do actually have to start off with a certain price point. So, whatever that price is, say if it's a policy, for example, back to my son, he's 10 years old, his policy is $20 a month. That's what it would be. So you do pay on a monthly payment plan. And we do have that option where you pay on a monthly payment plan, or you could pay the full policy amount for the year, which can range anywhere from, especially when you're dealing with a young person, $200 to $1,000, for the yearly plan. All depends on your age. But for someone young, it could be dirt cheap. It could be as cheap as, like I said, down to even $10 a month, even lower than that. Because the younger you are, the cheaper it is.
Can I add to that?
Work on payment plans
add to that
as well. Go ahead, Kay. Mm-hmm.
Go ahead, Kaylee.
Hey, can you hear me?
Yeah, go ahead. You good?
Can you hear me?
Yeah, I can hear you. Go ahead.
Okay, so now what I was going to say is that, so pretty much, yeah, I'm just going to piggyback off of what Rashidi was saying. When it comes to the price for an insurance policy, like you said, it could be when somebody start getting life insurance, like when they're like a month old. That's the best time to get it. Why? Because like it's super affordable. It's less than someone's phone bill. You get a better bang for your buck. And what people don't know about life insurance now, it's different versus how it used to be. The traditional life insurance, it was when a loved one passed away, the proceeds will go to the family. And it's still that same way. But then now, life insurance upgraded. Just like you get an upgrade on your cell phone, you get an upgrade on your car, you get an upgrade on your policy as well. It comes with something called living benefits. Super, super important. Why? Let's say, God forbid, you got hit by a bus, you lost the arm, you lost a leg, something in that nature. The life insurance companies, well, depending on the severity of the situation, the life insurance you up to 85% of what your coverage is. So if you have $100K policy, $100,000 policy, you get $85,000. They'll cut you a check with no questions asked, depending on the severity of the situation. So I just wanted to throw that as well.
That's an excellent point, Katie. That's an excellent point right there.
That's dope. So basically, what you're saying is like, so if you have a life insurance policy, and you can use that also for yourself in certain situations, like if it's emergencies and stuff like that. Is that what you're saying?
Well, it depending on what product you have. Like if you have a permanent policy, it comes with something called cash value, like Rashidi was stating earlier. You can borrow from your cash value. You don't have to pay it back. That's if you have a permanent policy. With the term now, you can't necessarily borrow from the term. Term is only from 10 to 30 years. You can't really borrow from it. But if something does happen to you, you can use that money from the term policy. Yes. You can't borrow from the term just like that. Only with permanent policies you can do so.
So to answer it even further, Hashim, just like Kareem said, the living benefits, it's literally that, living benefits. So if something happens to you and changes your life dramatically, with those type of policies, the special type of policies with life insurance, they can actually give you, like you said, up to 85% of your policy So if it's $100,000 policy, they can pay you out $85,000 to live your life because you no longer can live your life the way you used to live it. If you got your arm chopped off, if you develop cancer, all kinds of stuff, they'll actually pay you out, and that's why they're called the living benefits, because life insurance policies actually give you a chance now to not wait till you die to just pay you out. But if something really changed your life, they're being fair now and saying, all right, let me pay you out most of your policy so you can go on living your life. So if you lost a job, or you can't work anymore, if you can work, you can only get a part-time job. Now you actually got that income. You don't got to wait till you unfortunately die to actually cash out. You actually, in that situation, can actually capitalize and use it for yourself, in that particular scenario. So.
Okay, that's what's up. That's what's up. And so let me unmute Killing's mic. Okay, so if a person is, like saying, okay, well, because I know a lot of times it's hard to get people to get into life insurance, even like credit and stuff like that, because people don't really understand the benefits or why they should. And you guys explained it a little bit here. Well, I want to know what is it that RKT Appraisals does for a person? Like they come to you and they say, hey, I want to get life insurance, or I want to, learn about how to make this happen. Like, what are the steps that you guys take? So if somebody hit you up tomorrow or today or whatever and said, hey, I want to make this happen. Like, what are the steps that you take them through to make it go down?
Go ahead, Kareem.
That's a great question. So the first thing we do is we want to know, what is the person's goal? What is the reason why we ask that question is because everybody's goal is different. Depending on what your goal is, that would determine which route we would take with you. Right? For the most part, what we'll do is we'll sit down with you, conduct a financial analysis, go through all your expenses, what's going in, what's coming out. And from there, we'll let you know not only what you can afford, but what you need. I'll do both. I'm like, okay, you can afford this much life insurance, but this is what you need. So then sometimes we run illustrations, we get people quotes, say, you know what, this isn't within your budget, this is within your range, this is not where you want to stay. This is where you just want to start off. And we'll get some people a term policy through that, and then eventually convert into a permanent policy. That's like the Ferrari of policies. The term is like your Toyota Corolla. Your whole life is a Maxima, and the IUL is the Ferrari of life insurance policies. So I would love for everyone to get an IUL, but the truth and the fact of the matter is not everyone can afford that. So we always work within the client's budget to make sure that they can afford it. And what I usually tell my clients is this. I think Rashidi said it earlier, is I would prefer you to pay it off annually. Here's the reason why. Because when it's annually, you don't really think about the bill as much. It still is a bill, but you don't think about it as much. And what I tell people, it's tax time. Instead of going to get that flat screen TV, instead of buying a whole bunch of things that you don't necessarily need, when it's tax time, pay off your insurance for the year. So as that money comes in, it goes right back out. You don't have to worry about it, and you're covered. And especially if you have children, if you have children, you don't even. If I know you have kids, we're getting you something. It's dangerous to not have coverage when you have children.
And I'm gonna jump in too to go even further to answer your question. Mr. Lucario. Essentially, whenever it comes to finding out the person's background, we ask questions like, where do you work? Reason being, that's an important question. And do you work? Reason being is most people, they say, oh, I got life insurance through my job. They do. It's called a term policy. It's pennies on a dollar. Makes sense to get the life insurance policy through your job because it's pennies on a dollar. But the reality of the situation is why you don't just want to have that only is because if you leave that job, you no longer have that coverage. And the reason why that coverage is so cheap is because it's called a group policy where it's all the employees. So if you have 5,000 employees, they can afford to give it to you for $1, $2 a paycheck or whatever the case is. And they give you like about on average $20,000 to $40,000. But the reality of the situation is you leave that job, you're done. So the reason why, to ask those questions is to see where you're at, because that's the first thing people say. I got insurance. I got it at my job. You do, but it's really not. It helps out, and it's a great thing you're doing it, but you need more.
Right.
To go into more deep with what RKT does is we look at the term policy. Great, you have it, but let's protect you no matter what happens. Let's protect you if you go to another job and in transit between going to another job and something happens, you don't have any money. So literally in a situation, and I've seen this even happen, it'll be a situation where you be insured with your job, and God forbid you go switch other jobs and someone loses their life in between when you start and the next start date, you're not even insured in between that gap. And so that's why you want to have other policies insurance policies outside of just your job. Plus, go even deeper. The whole purpose of during your job is that it's in your younger days. So it's cheaper to insure you anyway. That's also another reason why jobs give you too much cheaper. But reality is, by the time you're retired to get a policy at 65, the rate is way higher. Why? Because it's more likely that you've developed more diseases, you're getting older, you're more fragile, your immune system is weaker. So they know it's more probability that you got to go to the doctor for everything. And let's just face it, you're wiser, you're smarter, and you go to the doctor for everything. In your 20s, you didn't go to the doctor for anything. Your arm damn near had to fall off for you to go to the hospital. But at 65, you get a headache, you're going to go to the doctor just to go to a doctor visit.
Right.
So in terms of insurability wise, it costs way more to insure you at the age 65. That's why you just don't want to depend only on what your job offer and what's called a term policy. And what a term policy is, just what it says, a term. It's typically from 10 to 30 years, it's done. So not only do you not get any money on it, but when it's done, it's finished, it's over, and that money you invested in, you lost it. When it is an IUL and the whole life policy, it actually builds and builds and builds. You can borrow from it. Plus, on top of it, it lasts your whole life. It's a whole life policy. So there's no catches. No matter what, as long as you pay your premium, you're good to go. You're insured for the rest of your life. And if you got to borrow from it in rainy days, you can borrow from it and pay yourself back, or you could choose to keep that money and not pay yourself back. What I mean by that, you have a whole life policy and it's say 100,000, and at the end of the day you borrow 25,000. You have the option of A, just not paying back the 25 and leaving it at 75, or you can go and pay yourself back and get it back to that 100,000 over time as well. So you got a lot of options.
I wanted to ask, to kind of break it down like on a simple level, because I hear you talking. I hear you talking about term and life and this and that, and it's like I hear you talking about protection and insurance and and a lot of times, again, this is like a topic that a lot of people from our community is looking at like, man, this is just more gibberish from them folks, trying to confuse me, right? Because the average, as far as I know, brothers in the hood, we're not going to even live past 24. So what are you talking about? Like, what does the protection look like? You understand? So I get a life insurance policy with you or whatever. What does it look like? Like, break down the actual benefits of what of what I get. What am I getting when I'm paying this money monthly or paying it off yearly? Like, what does it do for my family? Are you talking about funeral arrangements? Like, what are we talking about? Like, what is the benefits of this thing?
Everything you just mentioned. Keep it very simple. The purpose of a life insurance is the same thing for car insurance. You need insurance just in case something happened. If you die, it pays your funeral costs. Why that's important? The first thing is, at the end of the day, when you die, it costs $15,000 to bury your mother, bury your brother, bury your sister. In these hard times, you got a life insurance policy. You can use that money to cover the funeral expenses. Okay. I mean, on top of that, it's the saying goes, am I worth more dead or alive? The truth is, for people of our background, we're actually not worth more dead than, because we don't have those policies to back us up. Because if you die, not only do you got to pay for funeral expenses, but also you got to pay for that people left behind, other things that you got to clean up with in terms of financials and credits and things like that. Plus, just products that you have that's not paid off. If you live in a normal day life, anybody from the hood, you get your first car. At the end of the day, if you die, that payment still needs to be made. that still needs to be handled. With life insurance, it literally gives you and covers everything that you got, so you don't lose it, and at least your family get it. So it's not tangible. What that means, it's not something you could touch, you could grab, you could take, you could put it down. No, but when it happens, you're covered. At the end of the day, life insurance is like if you have an apartment, you don't get the rental insurance. I don't need that. If something happens, something happened. But let's be real. Like you said, people from my area may not have a lot of money. If your apartment burned down, you can't go spend $10,000 on that furniture and it took you 7 years to buy. But if you had insurance, it would have been covered, and you can go to the store and go buy all those products. Same thing like life insurance. At the end of the day, if something happened, you can go out and keep living and leave your family something to go forward.
Right. So it's like replacing it replaces the income that I was providing while I was alive.
Exactly. Right. And in certain cases, it could put you ahead of the game. If you get a life insurance policy for $200,000, if you die, your family gets $200,000. That can help them a lot, bury you, live a better life. B, if you get a critical illness, now they give you 85% of that policy. You get a check for $175,000, and you don't got to worry about how am I going to live. On top of getting your regular disability, because now you're disabled, you get that $175,000 check, and you can go and live your life comfortably for a long period of time because now you got that money.
Right. I spoke to somebody. I spoke to somebody before too, and they were talking about how your life insurance policy can also help pay. Because sometimes if you a player like me, you know what I'm saying, you ain't got kids and you ain't really got a whole bunch of people that's gonna really run to come take care of you and wipe your ass when you're old. You know what I'm saying? You're gonna need to move into like a assisted living facility, right? So I spoke to somebody, and they was talking about how life insurance policies can help you pay for that too while you're still alive. It can pay for you in the old folks' home, basically.
No, that is true. You can also use that for that as well. That's why I said life insurance. Just to go off what you said, that's a strong point. You can use it for that. Life insurance helps you no matter if you have kids or not, because the whole purpose of it is for you to continue life and to continue to pay for life after life for the people close to you. So absolutely, living assistance, living benefits, anything that has to do with living, these new policies that help you with that, as well as, like you said, investment tools. That same very person that don't got no kids and don't got to worry about it, that person, if they get a life insurance policy at a certain age, the equity can build. Yep, and I say equity. And you 75, and listen, you don't got no kids. You don't got to worry about nothing. At the end of the day, you can start borrowing from that policy and taking nice vacations, living life the way you want to live now. Right. You know what I mean? So it's so many ways you can use that money, and it builds and builds and builds is the point of it at the end of the day as well.
Right. Because you hear horror stories about, old people running out of money and, working at Walmart and eating cat food and shit like that.
Absolutely.
I don't want to be one of them.
I could actually tell you a story.
Go ahead.
Right? Can you hear me?
Yeah, you go ahead.
Yeah, we waiting on the story. Wait, Kayleen, do you have a insurance policy?
No, I'm saying that my grandfather, right? Yeah.
Okay, because your hearing is already going, so you got to look at that.
I can't hear you.
No, he said.
Nah, go ahead. You talking about your grandfather? Go ahead.
Yeah, so my grandfather, right? Before he passed, right? His last job, he's working at Walgreens. He worked at Delta Airlines most of his life, right? And when he moved to Florida, right? He had was Walgreens. He was working, and because that was his last job, he had to work until he literally worked so long that he caught Alzheimer's and literally forgot how to get to work.
Damn.
That's how long he worked. Why? Because to a degree, they failed to plan. So then when it came to retirement now, they only had that lasted them 10 years and not the rest of their days.
Right.
So they had in Florida. And then he caught Alzheimer's and how to And what happens is a lot of people are caught up in these cases. So when it comes to life insurance, it's a big retirement vehicle. The idea. Can you hear me now?
You cutting out a little bit. You was cutting out a little bit. No. You was cutting out. So we heard that you were saying that they only had enough to last for 10 years, so he had to get another job. Is that what you're saying?
That is correct. That is correct.
Right.
And if would have life insurance policies, they would have been able to borrow from that money. One of the main purposes of life insurance, it's a vehicle. It's set up, it's designed to where you use it after you retire. And here's how you know here's how you know if you have enough life insurance. Take your annual income. Annual income and times it by 20. And whatever that number is, that's the amount of coverage that you should have at bare minimum. So if you're making $50,000, you times that by 20, whatever that number is, that's how much money you're supposed to have in coverage for your life insurance policy. And at retirement, you have the option to dip into it when you want to. You have cash value, it's still your cash, but the goal is not to touch it. The goal is to hold on to it until you reach retirement age, and then you live out your days comfortably.
Right.
You know, but it is there for emergencies, because when you have health insurance will pay your doctors. Life insurance, they pay you. That's the difference. You know,
nice,
and that's a benefit, which people don't understand.
Nice.
And then what I try to tell people,
do you work with Aflac?
Well, I ask people this all the time. Aflac, that's not one of the carriers that we work with. No.
Okay. All right. So you act
National Life Group. We work with.
Yeah,
I'm sorry.
He's breaking up. We work. He's breaking up. We work with a bunch of different carriers. We work with up to about 30 different carriers. Aflac's not one of them currently, but we work with other powerhouses. You know, because we're a brokerage firm, we work with a brokerage firm. You know, we have access to sell policies for everybody, pretty much. You know, we don't have every single body, but we literally have 30 different carriers that we use, all powerhouses, people that you heard of and people that you haven't heard of, that offer the same services just like Aflac.
Okay.
And what are some of the objections that you get from certain people when you try to tell them about life insurance or why it's important? What are some of the fears that people might have about doing it? Because when you introduce people to stuff that they might not be that aware of, or they don't really have knowledge on it. You know what I'm saying? What are some of the things that people are scared of, and how do you get them to realize look, it's not that scary. You just got to do it.
To be honest with you, it's very simple. The number one fear is I don't need it.
Right.
That's what people say. I'm alive right now. I'm young. I'm okay. I can't afford that right now. The obvious thing that everybody says is, listen, I got the cell phone bill for $100. I got my car payment. I got rent. I got all of that. I can't afford to pay life insurance right now. I'll get it later on when I need it, when I'm closer to die. In theory, that makes sense. But what I tell people, the harsh reality, what if you died tomorrow? Who would pay all those things? And if you do have kids, who's going to take over the bills going forward? If you have life insurance, even though you die, the memory won't die with them, but the finances will carry on with the kids and affect them the rest of their life. Reality of the situation is, it's just as important as having car insurance, because at the end of the day, if something happened, all those things you worked that hard for, gone, all for nothing. At least if you have life insurance, all those things are covered. That money that's left over to your family, they can continue living in the same house that you're living in, pay the rent up for 2-3 years if they want to stay there, and they could keep on and go on living the same way as if you left. That's the part that I tell people. If you died today, how would everybody else's life look like? Especially if you're the one paying the rent and paying that cell phone. Imagine the situation, you die tomorrow, and that person don't even got the $50 to pay that cell phone bill. That person don't got to pay the money to pay that rent. Now what happens? Kids can end up in foster care, or kids end up with random family members. Not that that's a bad thing, but the point is, now everybody has to readjust their finances based off the fact that you went to work every day. You pay these bills, or even if you were paying half the bills, I always tell people life insurance, it protects everything you're doing, because at the end of the day, it hurts and the truth hurts. But if you die, all that stuff you did, you damn near did it for nothing. And that hurts a lot of people's feelings, but it's the truth. If you die today, all those bills, what did you leave? What did you leave anybody? Nothing. Life insurance at least gives them something financially to move on, at least at the bare minimum, maintain their current daily life, and in a lot of cases, help them make their life better for the future.
Well, what if I say, forget all that because I'm gonna be dead anyway?
And you get people that say that too. But at the end of the day, if you're gonna be dead anyway, it's just about, if you only care about yourself,
that
it's all
true.
good. Then the truth is, but if you care about anybody else besides yourself, get life insurance. But the truth is, I'd look them in the eye. If you truly don't care about nobody else but yourself, you're good to go and you're all right. But deep down, we know the truth. Ain't nobody on this world only care about themselves. Even the most selfish person in the world care about somebody. May be mad at them, may be bitter at them because they had a falling out, but somebody care about somebody. So you can always leave somebody something.
Right.
Right. So we got a question. It says, Lakar, if you borrow everything from your whole life insurance policy, do you still need to make monthly payments once everything is gone? So what's your thoughts on that?
Yeah, so that's a great question. So you can't just borrow all the money from the life insurance.
You can't do that.
Yeah, now you can't cheat the game that much. So essentially, what they do is, the more cash value your policy develops, at that point you can borrow that amount.
What's the percentage? What's the percentage that you can borrow usually?
Honestly, it varies. It varies because some of the life insurance policies, it's one of those things where they're based on the stock market too as well, so it grows based off that also. But it depends on the policy. But for example, we'll sit down with your policy. Say if you get a whole life policy, we'll sit down and say, hey, in 10 years you can borrow $1,000. In 20 years you can borrow $45,000. And we actually give you it's a chart that we look at and tells you what you're going to be able to borrow down the line in certain scenarios. So you know how much you can borrow. But to answer that question directly, there's no insurance policy out there that you can just borrow the whole thing. Right. The only time you get any type of you get a serious chunk of money prior to your death is a life-changing event like a critical illness.
And to answer his second question, okay, so we verified that you can't borrow the whole thing, obviously, right? And then so how does it work though? Once you borrow, like say, okay, I got a life insurance policy, but I'm getting old in age and I'm trying to buy a house with one floor because I can't climb up steps no more, right? And so I'm trying to put, like 20,000 down on the house. You know what I'm saying? And I borrow like 40,000 or whatever. I borrow some money. How does it work as far as the continuing making payments? How does it work? So I borrow the money, and am I making an additional payment to cover what I'm borrowing, or is it the same payment that I'm paying every month? Like, how does it work?
So I don't want to go too deep on it, but it depends on there's two different types of policies. Same payment. But go ahead. Yeah, and I'll let you jump in too, Kay. So essentially, you in that particular situation, you can pay your policy back. You have the option of paying your policy back, depending on the type of policy is. You have the option of paying your policy back. They'll just revise the payments. So it's not additional payment. They'll revise the payment and say, all right, if you're paying $100 now, you're paying $125 a month because you want to replenish or pay back the amount you borrow. Right. Or you can potentially have the option of option B, where you say, all right, I borrowed that $40,000. I don't want to pay it back. So now if you had $100,000 policy, your policy is only worth $60,000 and your payment stays the same and you keep going on and on. And so let me just make it clear for the layman. So you have $100,000 worth of coverage in your policy. Mm-hmm. So when you borrow, so say if you borrow $40,000 and you opt to continue paying the same amount, meaning that you're not going to pay it back, that means you've taken $40,000 worth of coverage out of your protections. Exactly. Right. So when at the end of the policy, when you die or whatever, your family can ultimately only get 60 because you borrowed that 40. Exactly. Okay. Exactly. Okay. Mm-hmm. All right. No.
Nope. No. I don't want you guys to get confused. Okay. When you have a permanent policy, especially an IUL, right, it comes with the cash value. What you're borrowing is your cash value, not your coverage. It's like having, right? So you borrow from value. If you have to pay yourself back, you don't have to, never, right? It's your money. You can borrow from that without no penalties. That's your money that you can borrow from, right? And also what happens is this: let's say you can't afford to pay, let's say if you can no longer afford to pay your policy, your cash value is going to fund your policy. Whatever cash accumulated, and whatever the cash that was accumulated will start to fund if you miss a couple of payments. So let's say, oh man, money is tight this month, I can't even afford to pay my policy. As long as you have cash value in your policy, your cash value will fund your policy.
Right, but that's for
so
but that's
words,
for
if you have
Ferrari joint.
Also, if you borrow from yourself, you don't have to pay yourself back.
But
that's the Ferrari. That's the IUL. It stands for Index Universal Life.
Right. That's the good. That's the one when it
comes
to like a mutual fund.
Let me explain a little deeper.
All right.
When it comes to the IUL, right? Well, there's 3 different market strategies, right? You have where the most people put their money in the bank, right? What's good about the bank? You can save money, but you're not growing that much interest. It's very low interest, right? Then you have the variable account, right? What's good about the variable account? When the stock goes up, your money goes up with it. But what happens when the stock goes down? You lose money. But with an index, with an IUL, when the stock goes up, it mirrors the stock market. But when the stock crashes, your money gets locked into place. So you don't lose any money in an index universal life policy.
Right.
It's universal, so the flexibles are premium. What does that mean? That you can overfund your policy. Why do you want to overfund your policy? Because if you overfund your policy, you're building more cash value later on in life. So when it's time for you to retire, instead cash value, because it's anywhere from 8 to 12% that the cash is accumulating in that. So if let's say, for example, you have $50,000 in your cash value, if you owe, and let's say within a span of 20 years, that 50,000 turns into 150,000. If you overfund that policy, and these are just numbers, these are not accurate. If it can literally go from 150,000 to maybe 800,000 if you overfund. You will be paying. What does that mean? You're paying $40 a month for your coverage. Your coverage, you could by paying coverage. If you pay $100 a month for your coverage, you're overfunding it. Hence, you having more cash value by the time you reach retirement.
Okay, that's what's up.
If that makes sense.
Nah, that's what's up, man. That's what's up. I like that. So So what are like some of the I guess it's different, specifics as far as numbers are concerned, but like what's like the cheapest a person can pay a month for life insurance, and what's like the highest usually people pay? Like how does the numbers look in that as far as that's concerned? Or is it like varied, like in different, like
it definitely varies. Honestly, actually,
it varies. It depends on the client.
So it depends like more on the client and like what
it depends on the client. So the goals that you acquire.
Now go ahead.
It's certain things for your insurability. There's certain things that the companies look for when they want to insure a client, right? They look at your health status, your age, your gender, whether you're a male or female. I don't know why, but they feel like, and it's true, women live a lot longer than we do, so their rates are a little cheaper.
Right,
depending on where you work. Also, depending if you have a driver's license, your driver record.
Right.
But those are the things that the companies look for in order to insure a client. Even some of your hobbies. Let's say if you're a skydiver, if you ride a motorcycle, if you're doing something dangerous, it'll affect whether the companies are going to approve you for that policy or not. Why? Because at the end of the day, it's a business. They want to make sure that the people that they're insuring, that they're actually going to live naturally. Like if anything can happen, but naturally they want to make sure that you live. But the basics that they look for is your age, health, and gender. Whether you're or not. That's what they look for.
That's interesting. You know what I'm saying? Because and I like that you said it. Look, it's still a business. You know what I'm saying?
As far as the rate is concerned,
Right.
Yeah.
That's what's up. That's what's up. So is there anything else you guys want to let people know as far as like how do they what's the best way to get in contact with y'all? What are some ways that if people want to really get up on this, like what are some steps taking, all that other good stuff?
So we definitely do the 30 minute to hour consultation.
Right.
But they contact us at the www.rktappraisals.com, and then the phone number below the 973 phone number 420-5028. And then we sit down with them. We go over everything with them, and then we shop that person based off of all the factors Kayleen said. So to answer the question before, it could be anywhere from $10 to $100 a month on average. You know what I mean, based on how much insurance you want. But the main point is they call us, we go over everything, we shop all the insurance carriers, see who comes up with the best rates based off of that individual situation. So that's why we guarantee the rate, because we, based on someone that calls in at 22 years old, we go over the health conditions, everything else. We plug it in the system, and it kicks out to us automatically who has the best rate for them. That's why it's good to come to us, because we literally can guarantee you the best rate out there in the industry for all of your specific needs and wants.
Right.
That's dope. That's dope, man. Mm-hmm. So guys, make sure you guys go to the website, rktappraisals.com. That's the link in the chat right there and everything like that. So you make sure you guys jump on that. And man, Rashidi and Kayleen, I appreciate y'all coming through. You know what I'm saying? Definitely. We gotta do some more of this game on this.
Yes, thanks for having us. Thanks for having us.
Definitely.
Absolutely. Appreciate that. I
want to talk about mutual funds.
Can I just briefly say something before we go?
Yeah, go ahead.
Can I just briefly say something before we go?
Yeah, go ahead.
Yeah, go ahead.
I want to tell people out there, right? It's super, 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 super important to get life insurance. Why? For myself, I didn't see the value in it, right? But you know what they say, a hard head makes a soft ass, right? What happened to me is a couple of years of 2018, before I got into financial services, I was working in the food and restaurant industry. And while working there, I was always a healthy kid, athlete, played sports all the time. I thought I was untouchable. And one day coming home from work, started having breathing issues. Didn't know what was wrong with me. And I had a family member in the financial industry telling me their life. And I got sick and I ended up getting rushed to the hospital, right? They put me in an induced coma, right? And I was hospitalized for 7 days, in a coma for 3 days. I nearly lost my life. When I came home, I was on bed rest for a while, and I started to think and started reflecting about my life, and damn, why don't I get insurance? Because I almost lost my life. And I tried to get the insurance. At that time, I was uninsurable. The insurance companies wouldn't cover me now because they see that on record that I was sick. So now I tell people this: it's not just about you getting coverage. You literally only change your life, but your family's lives as well. You need to sit down with myself, Rashidi. We can go over your finances and get you something.
That's what's up. All right, that's what's up, man. Appreciate that.
But that's
appreciate you sharing that, man. Yo, how come you ain't called me and let me know you was on induced comas and bed rest and all that, bro? Come on, man.
Yeah. It's 2018. It's
the first time I'm hearing about it. Yeah. Come on now.
Yep.
Oh man, that's how it is, man. You guys gotta understand this is real life shit, people. You feel what I'm saying?
Yep.
Fucking shit, man. But I appreciate everybody tuning in. Appreciate you guys. Make sure you subscribe. Make sure you share this video with your peoples. You know what I'm saying? So they can get put onto this game. Because see, the thing is, a lot of us, like just people in general, they don't understand this type of stuff, or they don't know about this type of stuff. So if you share with people, let people know, get people more aware. You understand what I'm saying? So at least they know. So then now it's up to them whether or not, at least they'll be aware of it, so they're not ignorant to the situation. Because when you're ignorant to the situation, it's like, well, you didn't know. But now that you know, it's like, okay, now you make the choice. You see what I'm saying?
And this is a good way to become a high value man.
Exactly right.
You ain't nothing. You ain't nothing if you ain't a high value man these days. So you at least want to offer a bitch, protection of the life insurance policy. Like, bitch, I got you covered for 200,000, bitch.
I'm telling you.
Right. Facts.
That's
bitch,
right. That's right. Life insurance is there, I'm telling you.
And I could borrow up to 50% of my policy and buy you a Birkin bag, bitch. Don't you want nice things?
Facts.
I'm a man of value.
I'm telling you.
You're 4 miles.
So make sure you guys check them out. RKT appraisals.
I appreciate you guys. Thank you.
Yes, no problem. And the number is right down there or scrolling across the screen, 973-420-5028. So make sure you guys hit these guys up, right? So we out of here, people. Remember, the truth is inside you. Peace. We're going.